So today we're diving deep into a new intelligence report that says a massive, fundamental shift is happening in the gold market. And according to this analysis, what we're seeing right now, it isn't just some temporary price spike, it's a sign that the entire financial world is changing. Let's dig into the clues.
First things first, just look at that number. Gold isn't just climbing, it's absolutely shattering records. When this report was published, it was trading around $4,255 an ounce after a huge surge. But the report argues this is so much more than just market momentum. They're calling it a monetary repricing, a complete reevaluation of gold's role in a world where the old rules just don't seem to apply anymore. So the big question is, why? What is driving this absolutely historic rally? Well, this analysis points to what it calls a perfect storm. A bunch of powerful forces all converging at once. And getting a handle on this is really the key, because it might signal a major break from the financial world we've known since 2008. All right, so our first clue is buried deep inside the US economic data. You know that whole Goldilocks story we've been hearing? The one about an economy that's not too hot, not too cold? Well, the report says that narrative is completely falling apart when you look at the actual numbers.
And that brings us to a really important word here, stagflation. It's pretty much the worst of both worlds for any economy, right? You get stagnant, slowing growth, but at the same time, prices just keep going up. In an environment like that, your typical investments really struggle, which is exactly why gold tends to do so well.
The hard data really tells the tale. I mean, look at this. The latest manufacturing report shows a PMI under 50, which means the industrial economy is actually contracting. But at the exact same time, the prices paid index is rocketing up towards 60. That's not a warning sign of stagflation. That is stagflation right there in the data.
And here's why that matters so much. When growth slows down, corporate profits get hit, and that's terrible for stocks. Meanwhile, high inflation eats away at the value of bonds. So if you're an investor, where do you put your money? Capital has to go somewhere safe, and that's what forces this big rotation into real, tangible assets like gold.
Okay, let's move on to our second clue. The report suggests this might be the single biggest driver of everything we're seeing. And this one isn't about economic charts, it's about the people who are actually in charge of the money, the Federal Reserve.
This quote from the report is just so powerful. You know, if there's one thing markets truly hate, it's uncertainty. Well, the analysis here argues that we're finally getting some clarity about where the Fed is headed. And that clarity is pointing towards a massive monetary shock of easy money policies. We're talking lower interest rates and more money printing, all expected to be led by the presumptive next Fed chair, Kevin Hassett. The report breaks down what it calls the Hassett Doctrine. Okay, first up, tolerating higher inflation. That weakens the dollar, which makes gold as a store of value way more attractive. Second, suppressing bond yields. This basically means there's less of a penalty for holding a non-yielding asset like gold. And third, politicizing the Fed. That just creates a ton of uncertainty, which always drives people towards safe havens. Every single one of these is a huge tailwind for gold.
And listen, this isn't just some abstract theory. The market is betting on this right now. Just look at these numbers. There's an overwhelming 87% chance of a rate cut at the very next Fed meeting. The market believes this pivot to easier money isn't just coming, it's already here. For our third and final clue, let's zoom out and look at the global picture. The report points to a geopolitical order that's fracturing, which is a huge deal for gold, because gold is seen as a neutral reserve asset. It's not controlled by any single country. Now, the report calls this the peace paradox, which is really interesting. Normally, you'd think peace talks would be bad for a safe haven asset like gold, but not this time. The market is really skeptical that these talks will go anywhere. And even if they do, the huge inflationary cost of rebuilding and the permanent effect of sanctions are pushing central banks around the world to buy gold and get away from the dollar.
And that gets to the most crucial point here. The weaponization of the US dollar, as the report puts it, has set off a major strategic shift. Countries are now actively trying to de-dollarize. They're building a whole parallel financial system where gold plays a central role.
And this slide right here is the perfect example of that shift. The upcoming summit between India and Russia is a huge and mostly underreported driver. Their whole game plan is to trade directly with each other in their own currencies. The goal? To completely bypass the dollar-based SWIFT system. And in a system like that, well, gold becomes the ultimate neutral way to settle accounts. That creates a massive new source of demand from governments. Okay, so we've looked at the sputtering economy, the big change coming to the Fed, and this massive reset of the global game board. Now, let's pull it all together for the report's final verdict.
The analysis concludes that all of this is fueling what it calls a great rotation.
Basically, money is sprinting away from paper assets, stocks, crypto, and piling into hard assets, with gold and silver leading the way.
And this is creating this huge split in sentiment. You've got retail investors who've been burned in stocks and crypto in a state of extreme fear. But at the same time, you've got the institutional smart money in a state of what the report calls rational exuberance about precious metals. They see this as a once-in-a-generation portfolio shift. And this final quote just says it all, doesn't it? This convergence, a political Fed, a breaking economy, and a chaotic world order has created the perfect storm for precious metals. This, the report says, marks the beginning of a period of financial repression where governments hold interest rates artificially low to handle their debt, which is just incredibly bullish for gold.
And you can see that the big Wall Street banks are scrambling to catch up. They are no longer treating gold like some fringe asset. They see it as a core holding. You've got Morgan Stanley targeting $4,500 by mid-2026. Goldman Sachs sees a path to $4,900. The entire institutional world is waking up to this.
So the ultimate takeaway from this whole analysis is that this isn't the peak for gold. This is the launch pad. We're talking about a new long-term bull market. The old rules, they're out the window. A new era for gold is just getting started.
Which leaves us with a pretty provocative thought. If this report is right, this whole thing isn't just about the price of an asset. It's about a fundamental shift in what we even considered to be money. And the question isn't just if you're prepared for it, but what are you going to do about it?